All right, everyone, welcome to another, I was going to say crazy Monday, but this one's actually pretty chill. So I'll take it. Every now and then it's good to have a calm Monday, especially as I am with a lot of people are as well preparing for the Cash Tag Awards. So if you are going to be there, if you're going to be in New York, make sure you come up and say hi. I'm not a intimidating fellow by any means, so it's going to be a good time. And if you're in the area, I don't know if there's tickets left, but you should definitely go check it out because there's going to be a lot of cool trading nerds there. I actually just looked at the the guest list recently, which I probably should have looked at beforehand as someone who's going, but it's been great. It looks like a lot of cool guys there, so I'm excited for it. I think it will be great. But as always, what we're gonna do is we're gonna go through your symbols and we're gonna talk about whatever it is that you guys want to chat about, whatever it is you guys want to look at. That's what we're gonna talk about today. So make sure you're pasting in chat or you're putting in chat anything you want me to look at. For now, I'm going to just show you a little bit around the markets. I've got a short trade idea in gold that I've been thinking about quite a bit. So I'll share that guy with you guys as well while you type in all your questions, and then we'll kind of go from there. So without further ado, let's get my mug here shrunk off the screen a bit and go down to take a look at the overall market. So first of all, right, selling off a little bit here from the open, but still inside day, right? So this is yesterday's candle. We broke out a little bit, so technically, I guess not an inside day anymore, but we're hanging out inside yesterday's range. And at this very important level that I do expect there being some BS like this with, because this is the anchored VWAP from all-time high. You can see was resistance right here and resistance back here. So this represents essentially the average price of what would happen if someone was dollar cost averaging into the market from the worst possible price, which is all-time highs. So if you just started buying the market on like a weekly basis, this is where your average price would be, and it's both right here. You can see how this again was resistance before, makes sense to be resistance again. Also, it's where we broke down from after Liberation Day. So there's a lot of price memory, there's a lot of emotion tied up in this particular area when it comes to just overall price action. So we just have to be careful of that. And what that means is that not that we're going to stop right at the tick and then reverse the new lows or anything like that. That's what happened here, but that kind of thing is kind of rare. Just when you have big price memory areas, those big price memory areas can cause a whole bunch of just back and forth nonsense, right? Where you're up a bit above it, you're down a bit below it, it becomes a nightmare. So what we need to do is we need to just say, let's wait until this clears in a significant way, one way or the other. It's well below it, it's well above it. There is some sort of divergence with the price that's happening right now. That's my idea. The other thing I kind of tweeted about right before I got on here, it's still kind of true, but the outperformance in the RSP versus the SP 500 is something I want to look at. So the RSP and the SP 500, they're the same names. They're like all the same 500 exact same names that are in there. The RSP is equally weighted where the SP 500 is cap weighted. So essentially put, the cap weighted one just says NVIDIA and Apple and Tesla. These are larger companies, therefore more important companies. Therefore, they should have a larger weighting in the or in the market itself. So, if Nvidia goes up and 10 other stocks go down, the market's still going up. Right? And the RSP takes this same 500 stocks and says, "I'm just going to weight each one of these companies the same, so that you get a good kind of general overview of what's happening in the market." And yeah, so some relative strength there. That just shows us that this is kind of a big cap tech sell-off, which if you go to the heat map makes perfect sense, right? So this is the heat map. This is everything in the Russell 3000, which is like 98% of the investable universe. And you can see NVIDIA down 4%, Tesla down 4%, Amazon down 2%, Google down 2%. A lot of these big cap tech names are weighing the market down, where, health tech is doing fine. Even finance is within 1%. So these guys are really the ones that are weighing us down. Palantir down 2.5%. So again, a lot of just a pullback when it comes to these large cap tech names. Now, in the grand scheme of things, It's okay for Palantir to be down 2% because it's still up 63% from its lows. So these things are okay. So it's just so far a rest day until we can break the lows day, until something like that happens. We're just hanging out. Right? We sold off under this major level. This 550 is pretty much everything to us. We sold off under it. Now we're back to 550. Again, I expect just games here for a long period of time because the news is out, right? So we know down here it was the end of the world. Tariffs were huge. Back up here, this is where the tariff rollback happened. We just walked away from all of the tariffs. So it makes sense that we're just hanging out at that kind of equilibrium point. Basically means the market priced in the 10% tariffs and the war with China and all that kind of stuff right away. And everything around that has just kind of been nonsense. So it makes me feel that within kind of a band, from here to here or something like that, within a kind of a range around the staggered VWAP, around this prior high, around the tariff rollback high, we're just going to be in a no man's land until there is an increase in the tariffs again, or the 90-day pause is over and he's going to implement the tariffs, or there's some sort of, right, President Z sent me the right flower basket, so now we're ripping. It feels like we're in a hold pattern. Also, very important to note, we got a whole bunch of earnings. I read somewhere 80 of the 500 S&P 500 names are reporting earnings this week. So I think more than anything, right, the tariff news is out. The market's digested it. What is the tariffs are going to cause, I think, is pretty much been digested as well. I think the main thing and the most important thing is, what do all the CEOs of these mega cap companies come in and say? Because these are supposed to be the smartest guys in the room. If you're running Apple, Google, Microsoft, you're supposed to be you're the best paid guy in the room, so you should be the smartest guy in the room. So what do they signal in their earnings calls, which I know for those who are really hardcore, you can pop on right now with StockTwits and you can actually listen to the earnings call. How many times are they going to say tariffs? Just like last year, it was all about how many times did they say AI. There was all those super cuts of the guy comes out on stage for the CEO and they say AI, and they put all these together. I think it'll be the same thing when it comes to tariffs. The actual headline numbers for earnings won't matter. What matters is when they warn you, how much do they come out there and they brag and they say, we don't think tariffs are going to affect us very much next year. That's going to be a massive boon for the stock. If they come out and they say the opposite, which is, yeah, we're kind of worried about our supply chain or something like that, that will be a drawback for the stock. So that's what I think is important. So for those reasons, the fact that we have all those earnings, we got some economic numbers this week, and we're at such a technically important area of the market, I expect chop, and I expect both sides to get mad. The bulls are going to get mad, and the bears are going to get mad. Right? So in the long run, nothing happens. Then we get some resolution. Again, I think companies like Apple are going to be really, really important to listen to, because not only are they a massive company and a massive weighting in the S&P 500, but they also build a lot of things. I don't really care as much what Meta says because they're not as affected by tariffs. They don't build as much hardware when it comes to Apple, big companies like that. I think the market is going to be super interested to hear what these guys have to say, and it's going to be one of those where they're going to try to read between the lines and remodel their estimates for what they believe these tariffs are going to hurt these companies doing. So I see the chat. Hey, Howard, stay invest. I got some questions. And again, make sure you go and ask us whatever, or ask me whatever you want me to look at. I'll take a look. But that's my basic idea from the market, is that we're in a holding pattern probably until next week, when all these earnings are out and we've got some sort of resolution to something. Again, we got to keep an eye on the bond market, right? And as boring as it is, and I know no one wants to hear me talk about the bond market, we have to remember it was right here that Trump flinched and undid the tariffs. And then as we got back to this level, this is where a lot of chatter started to come out about how good the talks were going, even though China's like, we're not talking. And then the US was like, yeah, we are. It's great. So this seems to be kind of the zone that is making them nervous on the bond market. So we got to pay attention to that as well. Baba, Baba is interesting. Right, it's one of those that if we go to the daily chart here, China is one of those. It was talked about as uninvestable in this area, saying, "Hey, China's you can't put your money there." What an awful name, Baba was down 70% or so. At this time, it was around 75%. The lowest drawdown it had is 81%. Again, considered completely uninvestable. And then all of a sudden, that changed once they started throwing the kitchen sink at their economy. So this level on Baba, you can see I've marked up pretty well. It's like 121 to 122. That's a very interesting zone that we've been fighting back and forth in this level right here. So we're right there as well. So if we can get above that 122, I do like the look of it. I like buying things in this market that everybody hates, as hard as it is. Like Tesla, I own some. I bought some around this 230-ish area because all the news was bad. It was 100% about, Elon's ruining the brand of his company and people are burning Teslas and blah blah. That could all be true. Again, I'm Canadian. I try not to pay attention to what you guys got going on down there. But it's when all of the news was negative, but the price was unable to move lower. So I think it was on this day right here. That's where I ended up buying some because all the news was bad, but they couldn't push it lower. So when it comes to China, you would imagine this is FXI, but this your Bob is part of this FXI. What else bad news could happen? Right? They're tariffing the biggest buyer of Chinese outputs is saying they don't want to buy Chinese outputs. They want everything made in America. We know that there's housing problems there. We know that all of this stuff that is happening, but yet it's not going down very much. It's not even where they originally kind of threw the kitchen sink at their economy, which is right here. So that's FXI $25. Couldn't even get to there during a trade war. So if it can't get there during the trade war, your question is always is if the environment out there is as worse as it can be, but price is not confirming, that should tell us something. And that's one of the beauties of technical analysis is that you look at the news, and if the news is saying X, but the market just cannot go down, then it might be time to buy. So I'm looking at Baba and yeah, saying if it can get above this area, I'm going to pick some up. Again, that's anywhere from you could say 120 to 123. If it can get through that zone, or just use the wick of this candle right here, if it can get through that zone, that's interesting. Note that earnings is going to come out, and of course, earnings is going to come out like overnight, not even post market or anything that you could trade. So if you're holding this through earnings, you are just up, open to the whims of fate. You'll either be a genius or crazy, and it can gap on prior earnings. Like there's an earnings gap. This one wasn't so much. So it's always kind of good to go back and look at the history of the stock and say, is this one that goes crazy after earnings, or do the analysts pretty much nail this one? And most of the time they seem to get it on Baba. Again, it's a large company. It should be pretty easy to estimate what they're going to sell. So yeah, through 123, I like the look of it. The Qs, again, that's going to be the exact same as what I was talking about with the SP 500. I think we are range bound until especially Wednesday. So Wednesday evening, we have Meta, Robinhood. There's like 5 or 6 of them. And then Thursday, we have Apple. So again, a lot of massively important, not just important to the state of the economy, but if you take Apple, Nvidia, Tesla, you take Google, you take a handful of these big cap tech, that's like 15-20% of the index. So that's going to move the entire index one way or the other. So until then, I think we're range bound in the overall market. ET, energy transfer. Wow, someone's trading the boomer stuff. These utilities are unfortunately now tied to the AI trade, which I think is probably screwing up a lot of people's models, where generally speaking, it was if the market was uncertain, you would go into a lot of these names, a lot of these utility names. Problem with it is everyone's looking at power and power generation and power consumption, and they're linking it directly to AI. And as long as that's the case, then they're not going to be as risk off vehicles as they used to be. And they're not going to be this place to hide out. In fact, there's a whole bunch of, as a quant myself, someone who runs models, I do technical analysis to take trades every now and then, but 99% of all the trading I do is completely quantitative. There's a lot of models out there that would use the strength of utilities as a warning sign for the market, and they just got broken when it came to the AI trade because VRT, for example, was the top performing S&P 500 name last year, and the only time in history that a utility became the top performing S&P 500 name, because it's tied into AI. So everything's tied into AI. So when I look at something like ET, the academic in me wants to say this thing should be good right now because the market's uncertain. They pay a fat dividend. They should be okay because people will gravitate to places that pay them big fat dividends while they wait for the market to sort of stuff out and decide what it's going to do. The the part of me who has adapted has said, yeah, that's not the way it works anymore. So this is going to move probably a lot with like Nvidia and anything that's also related to AI. So I think you have to keep that in mind. And gap down, this was a Liberation Day craziness, has come back up, but kind of moving just in lockstep with the market. So you're buying, you always need to look at your charts and say, does this have edge over the market? Or is it just high beta, low beta? So what I mean by that is if your stock is moving and so focus on that for a second and then look at the chart of the market, and it's pretty close. If your stock is moving really closely with the market, then you're essentially just lowering the beta, which means you're lowering the amount that this thing will move relative to the market to something higher. The benefit is you get paid dividends. But it seems like if the market sells off, ET is going to continue to sell off and not do the thing that it should based off the textbooks, which is be inverse to the market. So you are tied to the whims of AI. You are tied to the whims of the market with this guy. However, it's not going to move as much. So if you're worried about the market, you're not going to take nearly as much of a percentage hit if the market does go down. And you're going to sit and collect a fat dividend while you wait. I mean, there's a lot of traders out there who said, you know what? I had really good gains in 2023 and 2024. I made a whole bunch of money. Now let me take some of that money, buy something that's going to pay me for a couple of years, take some time off, and when the market sorts itself out, then I'll be back and ready to go. And that's the kind of thing that you're seeing here as well. Someone asking to review Nvidia, sure thing. So one thing I'm doing a lot of, I talked a lot in the market or in the beginning here about how the S&P 500 is battling with its anchored VWAP from all-time high. Essentially just meaning if you bought it at the worst possible time, the market, and you started to average in at the worst possible time, which is the all-time highs, that this is roughly your price. And you're starting to get back to even, maybe up a little bit. I think it then behooves people to say, okay, anything that is under that anchored VWAP from all-time highs is by definition relatively weak. And anything that's above it, and above it pretty significantly, by definition is relatively strong. So right off the bat, I look at it and say, well, NVIDIA is relatively weak to the overall market, at least using this reference of the anchored VWAP. And then you can see what I have drawn out. I drew this out ages ago. And it's just the lows right here and then the highs right there. And we're just smack dab in the middle of that range. So I think, again, you always got to look at the market in themes, right? So we have the AI theme, we've got the robotics theme, we've got space, we got all of that. The question you should always be asking yourself when you're looking at a stock is how much of the current theme is priced in. So do you think the market was smart enough to price in all of AI and what that's going to do? Have they been smart enough to price in the whole robotics and everything like that? I think probably, right? Again, it took a while to reprice this thing. as AI became a thing, as it went from $10 to 100, so it just 10x from 2022 till now. And then it spent May 2024, so almost a year we have done absolutely nothing since then. I'm not interested in this guy unless we are buying down here at support or we are potentially shorting at resistance. If it breaks through and it cleanly breaks through to new highs, then maybe you'll be onto something. For me, we call this diddling in the middle in trading. It's just smack dab in the middle of the range. Could be here for years. Could just spend years between 87 and 150, which is a wide range if you can play it. But it's just not interesting to me right now because it is range bound. It is stuck. All right, we want we want something to trend. And by we, I mean technicians. So again, I'm not one that will tell you that technical analysis solves everything. But what technical analysis does and what it solves is for the basic things like where did buyers and sellers transact recently and what is the trend. So the trend, obviously, in the long term in NVIDIA is very, very bullish. Right? If you bought this and what were you doing in August of 2015? So you're up 22,000% from there. So the long-term trend is definitely bullish. However, it does these long periods of time of nothing and another long period of time of nothing. So this could just be another one of those where you just want to look at that and say, it's a good looking stock. Maybe I'll find something that's trending. Same with SMH, right, which is our semiconductor sector. That's going to be part of that as well. So for me, I'm more interested in things that are looking like they can trend and just less interested in things that are potentially range bound. That's for my trading style. Of course, there's money to be made in ranges. There's people who buy the low of the range, sell the high of the range. They do that over and over again, and they do fantastic. There's people out there who will do option selling strategies if they're kind of with me and they think, yeah, this is going to be range bound for a while. That's okay, right? You could sell iron condors or straddles or strangles or one of those things. You could probably collect a lot of money on it if it is going to be range bound for a while. It's not the funnest thing in the world, right? We want something that's going to move one way or another, but that doesn't look like that's what's going to happen. So AT&T downgrade. This is the first time I have seen AT&T trend nicely, probably in my career. Right? It's if you go back and just look, this thing's just not been something that really people care about. Oh, yeah, we're back to 1989 now. So of course, it hasn't moved very much recently. So I think it's getting roped in with the space side of things, and you're saying that it was downgraded, and the price doesn't seem to care that much. Maintain an overweight. I see. I don't see a potential downgrade, but it looks like they beat earnings, top and bottom. Bottom very barely, but they beat top and bottom. So that's a good thing. And price reacted favorably. So this one is something to me that's a little bit more interesting because you could just draw this out as a really typical kind of bull flag pattern. Again, I'm not a huge pattern guy. I'm the guy who tries to demystify technical analysis the best I can. But I like flags. And the reason for that is there's two kind of known truths in technical analysis. One is prices trend. The other is that volatility doesn't trend. If something's very volatile, there's going to come a time soon where it becomes really boring and not very volatile. It consolidates. And then there's times where if something's consolidating too tightly, it becomes volatile again. So this is why these flag patterns are interesting and I think profitable to trade because you're capitalizing in the fact that things trend, and then you're also capitalizing in the fact that the volatility that's getting really tight in order to make that pattern is probably going to revert back to the upside. So we're getting tight. If we break this downtrend, right, that's probably like 27.50. That could be an interesting one. And like I said with ET, it's good to get paid a fat dividend while you're waiting. What is it? 27 cents 4 times a year. That's like 4%. Is that what the dividend yield on AT&T is? 4%. It's not bad, right? To sit in something that if they are going to do the space thing, has a big potential upside while you're just waiting. This is wild. You guys are giving me like AT&T and Energy Transfer and all that. Usually it's like XYZ company that used to be worth $10 billion and is now worth $5. So good for you guys. Google from the long term. So, I won't reiterate all the talking points about, oh, is Google dead? Because I know myself, I don't Google stuff anymore. It's like straight to perplexity. If I want some searching, I guess ChatGPT search is pretty good now, so I might try that. But they definitely have that worry. The question is how long till that's kind of reflected. But it's at a big level. So 150 for Google has been the most important price since we're going all the way back to 2021 here. Resistance right there. And then again. And then comes in as support. And again. All right. So far, on a long-term basis, you've got a pretty, in my opinion, you've got a pretty easy trade here if you're interested in that one. If you're holding 150, probably want to be long Google. If it closes below 150 for a week or 2 weeks, it's time to get out. And if you think, fundamentally, you have to start looking and saying, well, do I think they're going to figure out a way that Gemini is going to be as good as all these other ones? I think Gemini is theirs, right? It's either that or I confuse it with the crypto exchange. But how much share from search are they going to lose to these different LLMs? All that kind of question. But from a technical point of view, it's just, is it holding that price? Is it holding 150? If it holds 150, then I think you can be long. Under 150, I think it's time to go. Just because this has been such a massive level for this for ages. And often, for me personally, those are my favorite trades. I don't want to have to think too hard about it. I just want to, take the shot, and if it makes sense to potentially get involved there, then I'll take that shot. And if not, I'm out. Right? The basement window trades, my old mentor called them. If you're gonna jump out of the window, you might as well do it in the basement window. The basement window right here is again 150 on Google. If you're above that, I think you go nuts. Below that, not so much. Robinhood is very interesting to me. So while here's the weekly chart zoomed out, you can see this kind of 60 to 70 area is going to be important because it had that one wick through right off the open and then completely fell apart to $5, and now it's been working its way back there. They're obviously going to have a lot to do with the Bitcoin and whether Bitcoin can hold it or not. Now, to its credit, Bitcoin has been doing a great job decoupling itself from the market. The market has looked absolutely awful in a lot of cases, and Bitcoin's been holding on just fine and actually holding strong pretty well as well. So there was, a couple days last week where the market was down one day and Bitcoin was up, and then the market was up that day and Bitcoin was up again. So this is what you should want to see for Bitcoin to have its next sustained level of growth. And the main reason for that is if it can identify itself as an uncorrelated asset where people can put some money in to diversify across just holding stocks and bonds, you're going to have a lot more inflow from institutional investors. You're going to have a lot more inflow from financial advisors. A lot of that stuff is going to happen. And if you don't see that and it just ends up being another leveraged risk asset, then why would a financial advisor tell people to own it, right? It's like, hey, you could just own Apple and get the same kind of exposure. So the fact that it's differentiating itself a little bit is very interesting to me. And again, Hood will be a massive beneficiary of that if it can hold on, because they're making money off the degens trading that kind of stuff. So I'm looking at this quite a bit as a potential cup and handle style play. William O'Neill disciples rejoice. The cup and handle, for those who don't know, the cup and handle is a super strong pattern and essentially just shows us what the idea of the cup and handle is. You have a downtrend that goes into a sideways trend and then it goes into an uptrend. So you have some bad news that shakes the market and the stock drops. And when it gets back to that price that it came from, that's your cup. And then what you want from your handle is not a lot of retracement, just showing that, right? Because if it goes all the way back up and then it fades all the way back down, then that's a downtrend. You want it to come all the way back up and then just pull back a little bit. And what causes the handle is just people taking profits from right here. Because there's some guy, there's probably a lot of people that really just went through and said, hey, I've been long this thing since the 60s. I watch it go down to 6 and then back to the 60s. I'm out. I'm taking my money. And that causes, right, this little bit of a pullback and profit taking. So what you want to see is this pullback to get bought up at higher prices. And then from there, if it can consolidate for a period of time and then break out, then that shows that it's ate through all this overhead supply. And now it's ready and it's okay to make higher highs and bigger deals there. So yeah, I like it, but right, you're tying yourself to Bitcoin. Right? Robinhood is going to do great if Bitcoin holds on. Robinhood is going to do poorly if Bitcoin falls apart. So you just gotta be okay to kind of tying yourself to that fate. So to be a Robinhood believer, you kind of have to be a crypto in some respects believer. So remember when they did an earnings report and they guided down on the earnings report because people were trading Doge less? That's how important crypto is to Robinhood's finances. ZOO. I asked for this, didn't I, by saying you guys were actually asking about real companies this time. Yes. ZOMDF. Yeah. This one looks awful. I don't know what you want me to say about something like this. Just crashing down on the OTC. Can't get off the OTC. Has earnings soon. Pharmaceutical, so it means you're basically just betting on whatever drug they have in their pipeline to be worth enough to get them potentially bought out. So that's the kind of bet when it comes to these. Again, I will not be one who always defends technical analysis. When it comes to biotechs and things like that, technical analysis is borderline useless. Right? It's not going to help. It's do they get their drug? Well, great. This 5 cent stock might be 20 cents or 30 cents if the numbers are good. And then with a lot of these small biopharmas, you're praying for a big guy to come buy you out. It's like the psychedelic sector, which again I've been very vocally interested in, just because they're doing better things, I think, than the marijuana sector, which tried to just become commoditized. And this is not. It's a medical equipment for pets. Yeah, well, so again, if they're not making money, then and they don't have any drugs on the go, and the chart looks like that, they're probably going bankrupt. But yeah, so I think it's one of those you're going to start to see buyouts in these psychedelic sectors soon, and then that might be a place to play. But until then, like trying to do technical analysis on the psychedelic sector as a whole is just a fool's errand. Conrad. Conrad Industries. Yeah, not enough volume to do. This might not be what you were looking at, but this kind of anytime you see like days that have gone by where there's no price action, that's nothing you could do any kind of technical analysis on. Because technical analysis is studying the behavioral economics, the flow of money and where the emotions would lie from where the money has been in the past and where the price action would be in the past. So something that is insanely low volume, again, can't do technical analysis just because it's there's no emotion because no one trades the stock, right? So that emotional part of it is dead. So yeah, there's really nothing you can do there. CNTAS. That's not that's not a company. Well, at least not one that I'm seeing here. So all right, guys. So we got some more time if you want me to look at some more charts, but I'm going to take a break. So put whatever you want in chat there, but I'm going to take a little break and start to look at just the overall market and kind of see what's happening there before we can go back and what have we missed? So far we're putting a little bit of a bounce. This blue line is that anchored VWAP from all-time highs. You can almost see how important it's been a little bit better on the intraday chart. So this is a 30-minute chart. And we broke it, and now we've come down and tested it from the underside. So it'll be interesting to see if the market digs in here and then starts to push higher. If so, great. However, it's not something I think I would take necessarily a bet in. And I'm going to take on SMMT just because I'm watching that one. SOXL. So this is going to be the same kind of analysis as NVIDIA and all that. The only thing that I will always warn people of is these SOXL, the double, and especially the triple leveraged. These are going to degrade over time. It's just the way they work, right? They can be leveraged because they use derivatives to leverage themselves, and those derivatives are going to degrade over time. So it's like you just have to be. There's so many people that I remind that of, and they don't know that if you hold on to this stock forever, it's gonna go to zero at some point, right? They go down to generally around the $5 to $1, then they reverse split, and then they go down again and they reverse split. Lab U, I think, is always the best example of this. Right, Lab U is never worth $4,000 a share, right? This is part of it. Now, certainly hasn't helped that the biotech sector has been one of the worst performing in a long time here. But it's not a bug. It's a feature, right? For them to get this massive leverage, they have to leverage against something. So they take the SMH, which you can see again, the SMH is doing a little bit better because they take the SMH and they buy puts on it and they short against it and they do all of these things that they can do in order to get that exposure, mostly options, right? So over time, they'll degrade. So I like to do that rant every now and then. You probably know the person who was asking, but just in case somebody doesn't, I just think it's important to have that as a yes, I understand. It's like sign here is kind of what I'm saying is that yes, this thing will go down over time. So what you're doing is you're trying to take a short-term bet that it will kind of be better than that degradation that will be caused from OXL, from the just naturally decaying part of everything. So then it's right also because of that, because the price will never line up with the ETF because it's going to degrade over time. And this is what someone just asked, does TA work on leveraged ETFs? I never would recommend doing the TA on the leveraged ETF because it's just a derivative. And this is also something that triggers me. People who do technical analysis on the VIX trigger me. And the reason is because the VIX is not something that's really a product to be traded on its own. Although people trade it and people do great trading it, it is priced solely by not supply and demand of people buying and selling the VIX. It is priced solely on the fact of how many people are buying puts on the S&P 500. More people buying puts on the S&P 500, the VIX goes higher. Less people buying puts on the S&P 500, the price goes lower, right? So same with SOXL, isn't going to be priced based off whether people are buying or selling SOXL. What they do is they with market makers and all kinds of stuff as well, they make sure that SMH and SOXL move together. But this is essentially a derivative product that owns options on the SMH. So I would say you do your analysis on the SMH and then you trade on the SOXL. So for example, I know a bunch of day traders who will have like their chart of the XLF, and then they'll have next to it the order entry of FAS or FAZ, a leveraged financial product. Or for this example, they'll have the chart of SMH up, and then the order entry will be for SOXL. So it's like if they like the price, they'll, instead of buying this, they'll buy the other one. So for example, like GD, like I'm looking to buy this triple inverse short gold contract. If gold starts to sell off and this one moves higher, I think that this will actually potentially double in the next gold sell off. So I'm watching this one very closely. But I'm doing my analysis on the GDX, which is the thing that it's mirroring, if that makes sense. So no, I would not do technical analysis on leverage ETFs. I would do them on the base version of the ETFs. And to me, just like I mentioned before with NVIDIA, NVIDIA is caught within a range, and all of semis seem to be caught within a range. So, right, we're above these lows right here again, but we're smack dab in the middle of the range. So when you're in a range like this, I would highly suggest you play the range. If you're someone who wants to buy support, sell resistance, it's great. I wouldn't expect this just to rip from here because it's got so much overhead. So, but if you like SMH, you buy SOXL. There's an XOSS if you want to short it. You can do that as well. Again, just know these things are dangerous, right? Leverage, it's a double-edged sword. Now, the benefit, again, I always say, don't look at a triple leveraged ETF like you can make 3 times as much money, because it also means you could lose 3 times as much money, so that doesn't really help you. Look at a leveraged ETF to say, I only have to apply 1/3 of the buying power, so I can take more positions. So say I'm bullish semis, and I buy SOXL, and then I'm bearish gold, so I buy GDXD, right? And then I'm bullish financials, so I buy FAS. Well, I could do all of those 3 trades with the exact same amount of buying power as if I was just to take SMH with a full size. That's the power of these things, is you should be able to take smaller bets, more bets, and then still get the same potential returns split across different instruments. So yes, look at them like that. Do the technical analysis on the base one, and then do the actual order execution on the leverage ones. So JetBlue is still around. JBLU, or is that Spirit, that one? No, this is the one that I thought was going bankrupt too. So again, basement window trade, right, is one way to say you're down 50% from all-time highs. Generally not what you want to do. Airlines are rough anyway because it's just such a crappy industry to get involved in. People don't make a lot of money. But you've got a lot of support down here. This is, anytime you see this little dinosaur here on TradingView, that means that's all of the data. So every time in the past it's come down to this $3 it's bounced from. So at the very least, if you're going to try to catch a falling knife in an awful company, you've got your out. It's almost new all-time lows. I don't know if, again, that's a bet that I want to take, buying things into all-time lows, but you can do it. Just know there's a lot of study, A lot of white papers, a lot of math done showing buying 52-week highs and shorting 52-week lows is the ticket, right? Doing the opposite of what a lot of people try to do, which is what I think is the worst saying in all of finance. They should find the guy who popularized it and take him out back somewhere if he's still alive, is the whole buy low, sell high thing. You want to buy things that are trending higher and make bets that they will continue to trend higher, and generally stay away from things that are trending lower and will likely to continue to trend lower. But that's my Spirit is got a new ticker, FLYY. There's nothing yet. So if it is, it's doing it later. Yeah, Dunzo. There's another one here. Rocket Lab. Oh yes, you're talking about the anchored VWAP from all-time highs. So yeah, this is a good example as well. All right, so you grab a VWAP, you slap her on all-time highs. You can see that this one, just like the SP 500, is battling with it. Right? And I don't think that's a coincidence, right? So the idea it was that we have this anchored VWAP from all-time highs. This is going to be an important anchored VWAP because it just tells us where the average market participant is hiding out if you started to buy the market at the worst possible time. So you can see how that could be a pretty decent sentiment style indicator. If that pushes, if we break through that and we start to trend higher, then that's a good sentiment indicator, right? It means people are now, even the people who bought at the worst time, they're making money. So everybody should be happy, right? Rocket Lab being especially one of these more momentum driven, right, story stocks. It's not like a blue chip or anything like that. It's going to be a lot of the same, where it has to get through this in order for that sentiment to flip. And that's how I'm looking at these AVWAPs, again, as sentiment style indicators, because if everybody's making money in the stock, sentiment's good, right? Things look great. If nobody is making money in the stock, sentiment's bad. So if you slap a VWAP from a low point and it breaks down under that low point, then it's the same kind of thing. It means people dollar cost averaging, even if they got the lowest price possible, are now losing money. So this one's got to stick the landing. It's a nice looking chart. You zoom out, you take this line here, which was this prior high right there. We held that when we came back to it. So there was some accumulation in the $15-16 area. Now we're back up here, and you can see we're fighting it. Right? So on Friday, we closed right at it. Today, we gapped above it, but like most things in the market, then sold off a little bit after that as well. So I like the look of this one. I like a lot of these space names, like this ASTS, that has done a very good job holding this area right here. Just anytime I see something that is obviously a very speculative story type name, these guys don't make money, do they? No. So very, very speculative. And then you have this massive rally, like 1,900%. Your question is always, okay, when the profit taking comes in, are they able to hold it? Does the profit taking come in and just crash the stock entirely? Or are there people out there who are regretting the fact that they weren't able to buy in? Because if you have that, if you have people that were like, oh man, I really wish I got in ASTS, I'm going to buy it when it pulls back, and then they do, because I don't know how many people say, oh, I'm going to buy on a pullback, and they never end up doing it. That creates these shelves. And as long as these shelves remain, that just tells you that there is some underlying bid, and not only some underlying bid, some institutional underlying bid that is going to keep the price up. It means that there's some companies out there, some fundamental companies that say, okay, we completely missed this move. We think the fair value of ASCS is whatever. So if it gets to that price, we want you to buy it. And that seems to be around 20 bucks on this name. So that would, again, same kind of thing with Rocket Lab. That seems like it's around 17 bucks. And the beauty of being a technician is I don't know or care how they came to and derived that number. Don't care. That's the number they're using. I can lean against that number and know that if they're no longer buying in that area, means there's probably been some fundamental shift in the company and I should probably leave on with them. So yes, I like it, but we need to stick the landing above this AVWAP. So that would mean either a really strong close above it or multiple closes. If you can get multiple closes above it, you can get 3 or 4 closes above it, then that's great. Even if they're very small, they're at like 22, 23, or a very strong push saying, yes, the market is very much confirming that we have pushed through this. Now, again, got another couple minutes left, so make sure you ask some questions, but I'm going to go back to the SPY. I'm just watching, seeing what's happening here as, again, a trader. I always got to keep my half an eye on the SPY. And it looks like we've put in a low for now. We're still well above yesterday's low, which is the area that I'm going to watch personally. Right, that's where that line is now. If we lose that, then that was a little bit of a rejection at the VWAP. But to be honest, I want to see that. Again, even as a bull, even as somebody who owns stock and all of that. Because, right, we came up to this here, which is 550, and then we pull back, and then we come back up to 550 again. It'd be great if we pull back, but we didn't go quite as low as we did here. We pull back a little bit, and then we start to coil higher again. That, to me, is a very bullish sign, because just like we talked about with ASTS, and just like we talked about with Rocket Lab, and we talked about with all these guys, is that you're always just looking for buyers to come in either at an equal price or ideally a higher price. And so far, we've got one higher low. Another higher low would be great, but if we're just going to go right through that zone, then that becomes a little bit harder in order to say, well, this is, the exact price that I want to take here. So again, it becomes harder to say, okay, yeah, this is the move I want to take. So you could also do it like that with like a trend line and say, hey, if we kind of come into 532 and then we dig in there for a while and then we move higher and push through that area, that's a good one as well. Being a technician, Momo trader, are you sidelined until after big tech earnings this week? Not entirely, and I'm not always momentum driven, right? So again, over at my website, statsadtrading.com, I have all of the back tests for all of my systems going back 25 years on the site, and my whole shtick on trading is that there's not one system that works all the time, so I trade lots of systems. So I have some mean reversion, I have some pullback, I have some trend following, I've got some trend following, some rotational strategies, which just means like every month you change your portfolio based off of a couple of criteria. But to answer your question about earnings, yeah, kind of. And it's not so much because the earnings themselves, it's because a lot of my process is that on the weekend, I run my systems, and they take a lot of the weekend to actually download the data and to crunch the data and to come up with the symbols. And I'm always looking for stocks to either come down to a certain level or to break out at a certain level. So in the meantime, if the market's just going to do this for a while, which I think it might while it digests all this different earnings, then I won't get triggered to the downside and I won't get triggered to the upside. So there's a lot of nothing for me to do. Also, I personally don't, even though my systems don't necessarily say get out before earnings, I really don't like holding through earnings. It's one of those, in the long run, it shouldn't matter. You should have many's over the course of your career, over the course of your life. You should probably have as many things gap up and gap down because of earnings, assuming you're a long only trader. And net in the long run shouldn't really matter. However, it creates a lot of undue volatility for me and my portfolio where, you know, yes, I may hold in earnings and one may gap up 20% and then the next one gaps down 20%, or I just sit out both and I neither gap up or down 20%, if that makes sense. So I very much try to stay away from earnings. And because the market is doing absolutely nothing right now, even though if you look at the headline number being down, 0.8%, that feels like a big deal. But if you look at the chart, obviously it looks like nothing's happened. That kind of thing sidelines me because I need some type of movement in order to trigger some of these systems. So like here's, you can see my alert tab. None of these have triggered so far. So we wait and day trade in the meantime. I've got some day trading strategies that I'm working on as well, but that's kind of my whole premise is I think the more strategies across the more assets you can implement, the better. And if all you're doing is looking at charts, that becomes really hard because you have to like reprogram your brain for each one. But as a quant, I can simply say, let's test what happens when X occurs and then test that across 100,000 trades in 30 years and see if there's an edge. And if there is, then okay, I'll look for X. And then at the same time, I can say, okay, well, what happens if Y occurs? And I can test that. And if that has an edge, I can look for that. So that's systematizing these things and roboticizing these things makes life so much easier. And while we talk, it looks like we are selling back down here. So that low that we came down to looks like we might be defending that. And again, this is mainly, although the whole market's selling, this is mainly big cap tech. Now, big cap tech, obviously a big deal. But if you look at finance doing okay, retail doing okay, minus Amazon, there's a lot of arguments that Amazon's just a tech name too, because I think over half of its money comes from AWS now. ABBV, like this, in doing great and kind of mixed in healthcare. So a lot of this is it's just big cap tech. So we just have to be very careful when it comes to big cap tech if this can stop going down. It doesn't have to rip. It just needs to stop going down. That's the main thing in order for the market to dig in. So the fact that we bounced a little bit here and then failed, as if you're looking for day trades, you're simply marking this low, I think, at this point. And if we hold that low and start to drift higher again, maybe the low of the day is in. However, I thought the low of the day might have been in right here, and that certainly wasn't the case. So could be a lot more downside to come. And I'm hoping for it, not, I hope no one loses any money, but I just want a little bit of a pullback to trigger some of my long trades as someone who is overall bullish. If we do start giving up the ghost, the area to keep an eye on, I believe, is this gap right here. And a lot of people look at gaps because there's no price action within that gap. It means that there is no emotion in that gap. There's no one who's going to aggressively defend the price the way they would defend kind of inside a place that they got filled. So if we start losing it here and we start selling, again, 533 to 528 is an interesting place to take a look at. So, all right, guys, that is my time for this week. Reminder, if you're going to the Cash Tag Awards, I will be there. I'm leaving my little fishing village in the middle of the woods of Canada, and I'm taking a flight down there tomorrow. So if you're going to come, and you see me, come say hi. That would be super cool. And until I talk to you guys Friday, if I'm back by then and no flights get canceled, trade safe out there. Again, I think it's going to be a very choppy market, which I think could be problematic to a lot of people who are trying to get big directions. And so just wait for the market to prove that it's either trending up or trending down before you try to take too big of a bet. And I will talk to you guys soon.